Welcome to this Payments Unpacked podcast. Today, I'm really pleased to be joined from Nico from Tunic Pay. Now, if you've not come across Tunic Pay yet, Tunic Pay's landing page encourages PSPs to stop APP fraud by joining the Intelligence Interchange. And by doing that, stopping fraud, managing operations, and keeping your customers' experience delightful. Now, if I look at that and a backdrop of the eye-watering levels of authorised push payment fraud here in the UK and the introduction of a mandatory reimbursement requirement next month, now is the perfect time to get Tunic Pay's perspective on payment fraud and hear a little bit more about their mission. If you look at Tunic Pay's website, you'll see an acronym, APP, and it doesn't give the definition that you would expect. Tunic Pay that say that APP should not mean all payments pending. So with this in mind, Nico, thank you for joining me today. Please introduce yourself and Tunic Pay.
Mike, thank you for inviting me. That was the best introduction I could have gotten, so I think you've already done 90% of the work for me, but it is very nice to be here. My name is Nico, as you mentioned. I am one of the founders of Tunic Pay. Unlike a lot of your listeners, am actually quite new to the payment space and to the fraud space, and so I think it might be worth talking a little bit about how I entered into looking at payments fraud and specifically real-time payments fraud, which is that my co-founder and I, prior to starting Tunic Pay, met at a company where we were building a credit bureau, which is a quite audacious proposition. And so a credit bureau obviously provides data infrastructure in the credit space, but is ultimately to help for credit cards, right? What we realized after we ended that journey, that company was called Nova Credit, was that a lot of the infrastructure that exists on the credit side of the house does not exist on the real-time payment side of the house, and specifically in fraud. And so a lot of our approach to building solutions for APP fraud were specifically thinking about the learnings from the credit bureau world. And so some of those learnings, for example, are that in the credit bureau world, there's a very clear distinction between who good actors are and bad actors are, right? In APP fraud, there's just, denialists. In the credit bureau world, we were very focused on infrastructure rather than consumer solutions, and similarly, we're taking that approach here. And so a lot of those learnings we're bringing into the technology that we're building to help solve the problem of APP fraud here in the UK.
Very interesting to hear both your background, but also how you're applying it to this new task. If we were to dial back a little bit and take a bigger view, your perspective on what is the fraud challenge the UK is facing?
There's a lot of fraud challenges and a lot of conversations about the fraud challenge. I think what is pretty widely understood is that the age of AI is both going to cause a lot of challenges, meaning making fraud better, but also will bring a lot of solutions in terms of detection. I think that is a pretty, talked about point. I think maybe what's less talked about is the fact that English, in addition to being the lingua franca of commerce, is also the lingua franca of fraud. And what I just said actually assumes that fraud is not commerce, but actually fraud, as you know, is a massive business. And so I think that that's particularly the problem in the UK, is that fraudsters fraudsters that both originate in English-speaking parts of the world, but also that don't, come to commit their crime in the UK and the US. And so I think the English-speaking worlds are seeing massively disproportionate levels of fraud enabled by AI, like I mentioned. And I think the key distinction, for example, between the US, which is a market that I know very well, and the UK, and even Australia, is that UK has extraordinarily high levels of real-time payments penetration. As you've talked about very eloquently in your own writing, the UK, first in the world to implement real-time payments. Now, living in London, you very rarely even use cash and non-real-time forms of payment. And all of that ease, in addition to the fact that all the fraud is committed in English, makes the UK, for better or for worse, just the perfect laboratory for fraudsters globally.
That's a really interesting perspective on the challenge the UK is facing, both on your experience, but also the work coming also from Nova Credit. How have Tunic Pay turned that challenge into an opportunity? How are you seeking to address this challenge that we are all facing, whether we're personal or business customers making payments in the UK? So talk about how you've taken a challenge and created an opportunity.
Totally. I think the best way to think about, I've already compared it to our work in the credit bureau space. I'll make another analogy that will explain how we're building, which is a departure point for us, an original point of inquiry in terms of trying to figure out the structural solutions to solving APP fraud was looking at the protections that existed in the cards world that do not exist in real-time payments. And that means several things. One is that in the cards world, there is an authorization layer, but there's also an authentication layer that Visa and MasterCard play in the middle, right? And so in that authentication layer, that is where services like 3D Secure and other kind of fraud services can help to protect the merchants on one side, the cardholders on the other side, and there is just a lot of technology and protections that exist for both the issuing banks and the acquiring banks and the cardholders and the merchants. None of that exists for real-time payments. And so the easiest way to think about Tunic Pay is building that layer in between. And so that means a few things specifically. One is that Tunic Pay is building what we call the Intelligence Interchange. So that is the data sharing layer between the sending bank and the receiving bank. So at the point of transaction, Tunic Pay is building the technical infrastructure, the security infrastructure, the data sharing harmonization infrastructure to make sure that, if I'm sending money to you, my bank can receive some information about your account and also your bank's assessment of you as an account holder, and vice versa, which is the big change in mandatory reimbursement is that your bank as a receiving bank now has every incentive to learn more about me on the sending side. And so the core part of what we're doing is building that data sharing infrastructure, the Intelligence Interchange, and then around that, similar to 3D Secure, we're building the capability for sending banks and receiving banks to obtain more information about the context of the transaction through step-ups, again, similar to 3D Secure. And so the sending bank can ask the receiving bank for their customer to upload further evidence about the transaction or vice versa. And so, again, what our aim is to build the trust that exists with cards for real-time payments so that real-time payments can both take off as a merchant payment method, but also a peer-to-peer method as well.
Really interesting, this idea of this intelligence interchange. One of the first thing, I just want to explore just an angle of that interchange, because when I first came to the city and to banking as a junior clerk many decades ago now, one of the first rules of payments I learned was every debit has a credit. There were two sides to every transaction. And if we think about that in a fraud context, why is it vital that fraud models or effective fraud models look at both sides of the transaction?
I think it is vital specifically for APP fraud, which, not to get overly theoretical, philosophically, if you think about the structure of a scam, it is very different from ATO in the sense that with ATO, it is account takeover. It is a bank's own customer that is being defrauded or whose account is being taken over, right? Whereas in a scam, it is the other side of the transaction. So a sending institution can do all of the analysis they want, but they are ultimately blind as to the fraud risk of the receiving institution or person. And that's really important in a scam because it is the fraudster that is the recipient rather than than anything that the sending institution can see. And so while in first-party fraud or anything related to ATOs, a bank can, do behavioral analytics, can do device fingerprinting. They can do everything possible to make sure that it is actually their consumer that is initiating the transaction. All of those analyses will ultimately fall flat on their face when it comes to actually ascertaining the risk of the actual fraudulent party in the transaction, which is the recipient. And so what our Intelligence Interchange is doing is making sure that both sides can see both sides of the transaction.
That's interesting. There are two principles you talk about on your website. One is the looking at both sides of the transaction. The second is about sharing. Now, as humans, we're not always very good at sharing, and organisations are sometimes not good at sharing and sometimes preventing for sharing. But your website talks about a model described as a give to get model. Why is a give to get model so important for your proposition, but also for tackling APP fraud?
Yeah, I think it's important both because banks have different levels of risk appetite, and I don't just. I mean, I think when financial institutions think about risk appetite, they think about financial risk. But here there are all different types of risk, like privacy risk, information security risk, and so technology risk. And so banks have different levels of appetite when it comes to building the infrastructure and APIs needed to actually expose information. Thankfully, the work that the open banking kind of generation of companies did in the UK has enabled a lot of that APIs to be built, and so a lot of what we're building is on top of data that's already being exposed. But that notwithstanding, I think you can imagine a world where Bank A is only willing to share data points 1 and 2, Bank B is only willing to share data points 2 and 3, and so the middle ground is only data point 2. And so we have to be able to contend with those differences in both willingness and ability to share data. That said, it is very important for us to be very opinionated, that we think that in order for this whole data sharing enterprise to even have escape velocity, that a minimum set of data needs to be shared. As you know very well, and I'm curious your own experience here, Pay UK has done some of that and has done some of that groundwork to say what is the data. What is the minimum set of data that needs to be exchanged, both starting with confirmation of payee and then extending to the enhanced fraud data sharing. And so I think Pay UK has already drawn a line in the sand in terms of saying this is the minimum set of fields that needs to be exchanged. But what Tunic Pay is doing is both making that minimum set, based on the data that is shown to actually reduce APP fraud, but then expanding that to say if Bank A is actually willing to share data points A through J and Bank B is willing to share data points A through J, then they both get A through J, even if the minimum set is only A through D, right? And so, yeah, I mean, a lot of the inspiration that we take is from the really smart folks at Pay UK. And so I know that this is a topic that is very near and dear to your own heart.
No, absolutely, and it's really interesting just to hear how you are thinking this through and applying your technology and your thinking and your approach to a real challenge that we're all facing. And if I was a PSP today, and if I went to your website, I would see a statement that says, "Stop fraud, manage operations, and keep your customer experience delightful." Fantastic words. How does that come to life? What can you give me a case study example of what that might mean for a PSP who is facing this issue on fraud, introduction of mandatory reimbursement, and then sees a statement from Tunic Pay that I can stop fraud, I can manage ops, and keep my customer experience delightful without adding too much friction in? How might that look like for a PSP?
That's the holy trilemma, isn't it? Is to be able to keep consumers happy, not negatively impact experience, make payments go through, reduce fraud. The reason that we use actually those three as our guiding principles is because banks have different priorities, and we know that. So a large number of the tier 1 banks really, really care about OPEX. In many cases, they are already reimbursing close to 100% of the APP fraud scams per the PSR data, but they're doing so at massive operational expense. And so for them, they actually want to know that their fraud teams can adjudicate these cases more efficiently, right? And so they're actually looking to Tunic Pay to make sure that their call centers can obtain more data about the transaction in a more agile way, right? And so they care a lot about the OPEX. Other banks, especially the neobanks, really care about the customer experience, right? And so we've seen this, that they've just seen fraud as a cost of doing business. And so they have massive growth curves, but also commensurately massive fraud. But up until now, they haven't really had to re-baseline their capital position because of those fraud risks, whereas now that is changing. And so for a lot of those banks, they really care about the seamless experience and really care about minimizing friction, even if it means that they have to have really high OPEX to compensate for that. And so they actually care more about the front end of our experience, which is why that we've built an SDK around being able to make the inputs for our analysis as seamless as possible. And so I guess in summary, what I'm trying to say is that we are architecting our product around the different priorities that banks have, which is reducing fraud risk, reducing operational expenditure, but also making sure that we're maximizing the customer experience.
Fantastic. Nico, we've very quickly reached the end of our time together. Thank you so much for joining us today and sharing a little bit about you and your perspective on fraud, but a bit more around Tunic Pay's mission. So thank you so much for that. I've got no doubt people will want to reach out to you and to Tunic Pay. What's the best way of making contact with you?
Thank you so much, Mike. I've really enjoyed the conversation. They can reach out to me on LinkedIn. My name is Nico Barawid. They can also email me, nico@tunicpay.com. And I will be very responsive to folks that want to learn more.
Fantastic. Well, to everybody else, thank you for listening. Be sure to subscribe to this podcast. If you haven't already done so, make sure you also subscribe to my newsletter, Payments Unpacked, at payments-unpacked.com. Thanks for listening.